Hi everyone, and thanks for joining this Your Overseas Home webinar. My name is Roseanne Bradley, and I'm a senior writer at Your Overseas Home. Today we'll be chatting with Danny Cook, a trader from Smart Currency Exchange, about foreign exchange for people buying property overseas. It's great to see so many people with us today, whether you're watching live or on demand. So before we get started, Danny, please can you introduce yourself and Smart Currency to our audience?
Yeah, sure. Good afternoon, everyone. Thanks, Rosie. I'm Danny Cook, so I'm a trader here at Smart Currency Exchange. I've been working here for coming up to 4 years now. Here at Smart, we're a foreign exchange broker in the overseas property space. So we help tens of thousands of people each year go through the exact journey that you're undertaking. And yeah, I'm just going to give you a little presentation this afternoon about how we can help in your process, what we're here to do, and what the sort of process will probably look like for you guys over the coming months and years in your journey of buying property overseas.
Fab, thanks, Danny. So now we've got a presentation to share. Once Danny's finished, we'll open the floor up to questions. Should you have any as we go along, feel free to just type them in the right-hand side area of your screen, and we'll get to them at the end. So over to you, Danny.
Brilliant. Thanks, Rosie. So yeah, we're going to start with a little look back to 2022 first. And yeah, I mean, an incredibly volatile year in the markets, as you can see here from the slide and in this graph. We had a 14% swing between the highest and lowest rates of the year. So an incredible amount of volatility, really, when you think about even previous years. If you look over the sort of average of the last 10 years, the average movement you see is around 10%. So yeah, just an incredible amount of movement really going on in the markets. You can look here, the high was 122 that we saw. That was, you can see in about March time. And I just want to look at around September as well. You can see the low was around about 108. Obviously, that was with the tragic budget from Liz Truss. So you can see here in the 2022, lots of movement going on, a lot of volatility, and that's really what we're here to help with. Most of you watching this will be doing sterling euro transfers, and that's of course what we deal with mostly as well. So we've got a sterling euro graph here just to show you the amount of volatility we saw. Now there's a lot of influences that will have made this happen essentially, which we're going to go on to speak about. But this is sort of what we're going to aim to do for you here at Smart, is really kind of monitor these markets and ensure that you're getting the best guidance and support at each step of the process. Because as you can see, with this amount of movement between the pound and the euro, that really can create a lot of challenges for people like yourselves who are buying a property overseas in a different currency. And that's really what we're here to try and support you with. So these are some of the key influences we saw. We saw last year in the markets. First thing, kind of, if you can see from the previous slide, recovery from COVID-19. The UK was pretty much ahead of the curve, really, I suppose, in the sense of its vaccine rollout program that really was boosting the pound in the early part of last year. Sterling performing very well against most currencies. As you can kind of see, if we go back to the graph, you can see it peaked there in about March. So that was a good time for the pound. Moving on to the Ukraine conflict, which of course affected the UK as well as Europe. UK impacted in terms of the gas supply chain. That was something that was really impacting the pound's performance as well. And that comes on to the cost of living crisis, where again volatility created by that, particularly with again these two factors very much linked in the fact that the pound started to have a bit of weakness going into the sort of middle part of the year, as you can see there. Queen Elizabeth's passing, again, that had a big impact as well. But mostly, what we tend to see in currency markets is political factors, and much of the political instability we saw for the UK last year really did become a big factor in the pound's performance. The resignation of Boris didn't help the markets when a country's without a leader. That can often cause uncertainty from investors and cause a currency to drop down, as it kind of did with the pound. And of course, again, just highlighting this position here in September was the mini budget from Liz Truss and subsequent resignation. So that was a very, very tough time for the pound. Of course, that was when a lot of you may have seen it in the news that pound was at kind of unforeseen lows against most currencies, and particularly against the euro. So yeah, very, very concerning time, of course, when that was unfolding. Moving into 2023, where we are now, so I want to kind of look as well at how things are looking presently. good signs of recovery for the pound. So, but again, a 9% difference. So you can see there the volatility is still present to be seen, even when you might see pound looking a bit more stable. It's always going to be moving all over the place, the pound. But yeah, general sort of signs of improvement. But still, if you look at that chart, it's always a bit of a hard one to foresee, I suppose, where things are going to go. But things have certainly started to look better. So now I just want to look as well at what we've seen sort of so far in 2023. We had Jeremy Hunt's budget, which again, a bit more stability, you might say, under Sunak so far in terms of economic policy, which has boosted the pound's performance. But you've still got a lot of factors moving forward, a lot of problems for the current government and economic policy, deciders to sort of sort out. Rising inflation probably being the biggest one. Everything's getting constantly more expensive at the moment. What are the government going to do about this? Well, so far they've been hiking interest rates constantly. We've seen that similarly with the European Central Bank, potentially not to the same sort of degree, but it is still something that's being done. So you can see I've highlighted just the fact that where the interest rates currently are. So the Bank of England currently sits at 4.5%, ECB slightly below at 3.25%. Other influences that we've seen, we had the collapse of Silicon Valley Bank, of course, that again, a lot of you may have read about earlier in the year, potentially, more of a impact on dollar markets there, which mostly will be euro, but these sort of, seismic events that have impacts worldwide can still have ramifications on investors, investing in different currencies. So that was something to, an important event as well. Key dates in June I've highlighted there is, fairly imminently more decisions for the relevant central banks in relation to interest rates, and that is where you do tend to see a lot of movement in the markets as well when these interest rate decisions come out. So ultimately, all these things are going to have a big impact on the market, and your plans. So how do we kind of try and assist you with this? Well, there's a few different ways. We try and help you to understand your budget. You get assigned to an account manager here with us, such as myself, to help you through your plans and your journey. We deal with thousands of clients each year. Each of the account managers has a multitude of clients that we're trying to help as best as possible, and create a devised plan to help you manage this kind of risk. We help you understand the currency risk. So 2022 again saw sterling euro exchange rates move 14%. They're highly unpredictable and highly likely to move between when you pay your deposit to when you actually pay the balance on a property. So that's again what where we're really here to try and help you. Forward contract then. So these are some of the sort of products we have to assist with managing risk. So a forward contract, probably our most popular product that clients use. You can lock in the exchange rate for transfers made up to 24 months in the future. As a personal customer, this is something the bank will not do for you. So smart currency exchange, this is a product we provide, something a high street bank simply will not do. And it's the most effective tool in managing currency risk. Oh,
sorry, I think that was me.
Was that you? No worries. But yeah, so forward contract, most popular product we have for sure. Something that most of our clients are booking in. I would say sort of maybe 78% of clients I speak to probably end up going down this route. It really just give you the most control over your budget when working between two different currencies. And have you seen how much the volatility can really impact your plans when you're buying a property overseas? Market orders, so that's another product we have. When the market hits the rate you've budgeted for, we'll exchange your currency. So for example, market's currently at 116.35 as I look at it live. If you wanted to say target 117, 118, we can do that for you. We can place a live market order, and then we've gone back again. And then once it hits that rate, we will target it and buy the currency for you. A regular payment plan, as known as RPP, is more so for when you sort of bought your property and you're then permanently based out in wherever you're going to, and we are then transferring funds to you each month. So that can be pension payments, mortgage payments, just living costs for bills and whatnot. You can set a regular payment plan up so that you're sending us the same amount of sterling each month, and then we're transferring that out each month on a certain date. Similarly to a forward contract, that can be on a fixed rate or sort of flexi rate basis, so that on a fixed rate you're getting the same exchange rate each month, and the same amount of euros is guaranteed to land in your account each month. Or alternatively, you can have that on that sort of flexi rate basis, where it's just going to fluctuate each month and change based on where the pound to euro exchange rate has moved. So next slide, I'm just going to give a sort of quick real life, some real life examples then of how a forward contract can, I suppose, help you with your plan to buy a property overseas. So this scenario is applying 2022 interbank exchange rates. So we've got March 2023, Jason and Kylie. Sorry, I don't know why it keeps changing. So Jason and Kylie decide to buy a small villa for 300,000 euros on the Costa Blanca. At this stage, the total cost of the property is £250,863. In May, after finding their property, they pay a 10% deposit of 30,000 euros to take the property off the market. So that's at the stage of paying your deposit, the property is now off the market. At this stage, it's now costing you £254,972. So it's already increased based on an exchange rate movement, the cost in sterling. So when you're buying property overseas, you know what it's going to cost you in euros. That's sort of fixed in based on what it's on the market for, based on what you offer. But what's totally unknown to you is what it's going to cost you in pounds, because that's highly, totally influenced by where the exchange rate is. September 2023, they now need to transfer their remaining 270,000 euros to complete the paperwork and actually buy their property. The rates have now actually moved against them, and the total cost of the property is £263,327. So it's increased over £13,000 just in the space of 6 months. So that really, epitomizes how much an exchange rate movement can affect your plans when you're buying a property overseas. And as you can see there, in not using a forward contract, Jason and Kylie have lost out a lot. So moving on to the next slide. What we aim to do is, we want to reduce the risks and make sure you enjoy the certainty. So in terms of the sort of steps of speaking to us and dealing with us, step one is to speak to an expert. So you open an account with us, it's totally free and non-committal. You get assigned to your own personal trader who helps you each and every step of the way. They are, they're on hand to help you whenever you need it, really. So you get their personal direct line. You can call them whenever you need help. You can ask any questions. You can try and understand what the markets are doing, where they're likely to go, anything like that. And we would try and help you as best as possible to make an informed decision on your currency requirement. Step two, understand your budget. So your personal trader will get a very in-depth understanding of your plans. They'll want to know exactly sort of, what dates are involved, as and when you're going to need currency, and ultimately try and help you as best as possible to understand your budget between the pound and the euro and what it's going to look like, so that you don't have to do that yourself. Step three is to agree your currency plan. So before you're actually kind of going out on trips and looking at properties and whatnot, your expert, your personal trader will have spoke to you and said, this is what we thought we should do here. And you would come to an agreement on sort of what the best route forward is for you. Obviously, every client is going to be different. Everyone's going to have different ideas about how they want to manage their currency exposure and how they want to go about it. But your trader will be there to help you every step of the way. And step four, execute your currency plan, secure the exchange rate. So yeah, step four is, executing it, making sure that everything's done in the right time frames, and ultimately making sure that the euros are getting to where they need to be at the right time, and yeah, making sure that the plan what we planned before is being executed at the right time. And step five is to just enjoy your new home, and then it's all done and dusted. So a bit more about Smart. So we are the trusted voice for high value international payments. We specialize in property transactions. We transferred more than £12 billion over the years. So we've been around since 2004 now, one of the longer running names in foreign exchange, coming up to 20 years. So we are very well established in this space. We've helped over 45,000 clients over the year do exactly what you're doing. We've managed over 600,000 transactions in that period of time. We're rated excellent on Trustpilot. So I always encourage my clients to go and look at our reviews. I think when you're moving a very large amount of money overseas, trust is probably one of the most important things, and security. You want to be using someone who's well established, someone who's done this countless times before. And if I was a client in the same position, I would want to be reading reviews, seeing what people who've used the company in the past have said, to ensure that I'm working with someone reputable and someone who knows what they're doing. And we're a UK-based team. Our head offices are based in London. We do have some offices in Spain as well, but we are predominantly UK-based, and we have predominantly UK people on the phones to answer any questions from clients or to assist with any transactions. It is all UK-based. And that's it, really. So we're going to move on to a Q&A now. So Rose, I don't know if there's any questions that have come about from that.
Yes, there is indeed. Let's just have a look. So David asks, what happens if the market rate doesn't hit your budget rate for a market order?
Yeah, it's a good question. So that is essentially, the slight drawback from a market order. You are essentially still taking a gamble on the market. So when I have a client who's looking to do that, I always make it very clear to them that we're setting, potentially an order level that is realistic. You don't want to be setting something that's totally, I've got a 3% chance of happening. So we would always discuss that. But essentially, yeah, if the market order doesn't hit, it doesn't hit. So there is still that risk element in terms of placing a market order, because you still have no control over whether that will hit. So I'd make sure in that case that maybe we had some kind of forward contract in place for half of your budget or something like that to protect you from if the market order doesn't hit and the market drops down. We have something there to protect you from a lower drop. So yeah, it's a very good question, because that is essentially the main sort of drawback of a market order, is that there's no guarantees. That order is only going to trigger if and when the market hits that level.
Okay, that's great. Thank you. So for overseas buyers, is it a common thing to get a forward contract on either the whole budget, or is it more common to have it on, say, half the budget, a set budget?
Yeah, another good question, and both are totally viable. It would ultimately depend how much protection you want to have and how much clarity you want to have over your budget. So I would say probably having a forward contract for the whole budget is more popular for sure. But there are clients who want to have just half of their budget locked in, and they want to leave the rest of it to see if there's going to be an improvement in the market. So both are viable. I would say having a full forward contract locked in is preferential in most cases, simply because, again, it gives you more clarity and more certainty. I think, often, as I say, clients who are buying a property overseas, they want to just really have that certainty and knowledge of what the property is going to cost them in sterling as well as euros. They then can focus on the other complexities of the property purchase, like dealing with the lawyers and the counterparty and whatnot, and not having to worry about what's also happening in the foreign exchange markets as an added factor in those plans. So yeah, I mean, again, both absolutely viable, but I would say full contract for the full balance is more popular, I think, again, because of that certainty aspect that it brings to the plans.
Yeah, definitely. Thank you. David's asking the example of fixing a rate with a forward contract. You talked about how you could save up to 12k in the case of 2022. It could just as easily go the other way if the pound weakens. So how does the strategy mitigate the gamble?
Yeah, again, a good question, and it is a good question to ask, because essentially, once you lock in with a forward contract, you are locked in. So it is ultimately that decision of whether you want to have the certainty or whether you want to have a bit more of a gamble with it and wait and see if the markets go up. But I always say to clients who don't want to book a forward contract and they want to just let it run and see what happens in the markets and hope it improves, that make sure you have the funds to do so if it doesn't move the way you want it to. Some people that I'm speaking to, this is their life savings, they contribute to it, and they simply can't afford for the market to completely drop and have 10, 15, 20 grand's worth of extra costs just due to a currency movement. But if you do want to sort of have that gamble and wait and see what happens, that is totally up to you and totally something we can still help with. We are here to help with every client who has different mindsets with these things, and I help a multitude of clients who don't book a forward contract and want to simply wait and see what happens with the markets. But yeah, it is once you are sort of locked in, it is a case of your forward contract is there, and that will be your exchange rate for your purpose. That's not going to change. But again, we can help clients who don't want to do that as well.
Oh, thanks. I think we've got a couple of people on the call from outside the UK. So they are asking, one is in Azerbaijan looking to move to change to euros, and the other is in Saudi Arabia also looking to transfer to euros. Is that something Smart could help with?
Yeah, absolutely. So we help with all, most currency pairings, really, not all, but there are the most sort of major ones, or multitude of other currencies we do help with. So yeah, we can certainly help with those. We help clients moving to Australia as well, clients moving to the US. So yeah, we certainly do help with multitude of currency pairings. It's not just sterling euro that we can assist with.
Oh, fab. Thanks. Thank you. We've got a couple of questions from Abby. She asks, is there a set rate that tracks below the advertised rate? And how much does this vary depending on how much money you have to transfer?
Yeah, so that's another good question. So what we're talking about there, you've got the interbank rate. I presume that's what I mean. You've got the interbank rate that you'll see when you Google an exchange rate online. So it's kind of important to be aware as an individual that you won't necessarily be getting the interbank rate yourself. You'll always be trading slightly below that rate. Our rates are going to be much more competitive than what you may get through, say, a high street bank. They're going to be a lot closer to that market rate. Generally, yeah, for high volume transactions, you can often speak with your trader about about the rate and what's going to be achievable for a high volume transaction. I'd say generally, the more you're doing, you are going to get a rate that's slightly closer to market. That is generally how it tends to work. But ultimately, yeah, you want to be aware when you, as an individual, when you're looking online, that you aren't going to get that headline rate. So yeah, that's definitely something to be aware of.
And how does the rate vary depending on how? So you mentioned that you could do a forward contract for up to 24 months. Does the rate differ depending on how many months you book that contract for?
Yeah, so essentially, when you're booking a forward contract, the forward contracts is slightly different to, say, a spot transaction, where you're just doing. Those are kind of the main two types of transactions we have. We have a spot contract and a forward contract. So there's others, market orders, but those are sort of the two main ones. So a spot contract is always based on the day, and the difference there is that you're having to send to Smart, the full amount of currency within. Generally, it's around 3 working days from the point of booking the contract. With the forward contract, it is slightly different. We're buying the euros for a date in the future. So that's where it becomes slightly technical. You have to take into account something called forward points. So the rate is going to be slightly different on forward and spot. It's not going to be, massively dramatic, but there is going to be a differential to take into account there because we're buying euros for you for the future. But I have to say to clients, it's more about the certainty that's going to bring you than sort of potentially what the exchange rate is, because again, you just have no idea what the rate's going to be in, say, 3 months' time when you're actually looking to complete on that property. And the priority for us is always, making sure you do get that dream property, and it's all going to be within your budgets.
Yeah, definitely. We've got some great questions coming in here. How far in advance of your property purchase would you suggest getting in touch to lock in a forward contract?
Yeah, another good question. And again, it's ultimately the client's decision as to when you do that. I've had clients before book a forward contract maybe a year out because they like where the exchange rate is, or again, they want to take control of their budget. So it is ultimately up to you. I would say probably most of the time when people are booking a forward contract, it's at the point of offer accepted. That's generally with my clients when we tend to get to lock one in. That's when we would really be suggesting, if this is the route you want to go down, this is a good time to do it, because then, of course, the last thing you really want to see is thinking, right, I've offered 300,000 euros for this property, it's costing me 270,000 pounds, and then after that, it's all just going to be constantly changing, and then just highly exposed to currency risk. So, I would say in most cases, we would say offer accepted is a great time to do it. But similarly, I've had clients before do it, 6 months out, a year out. It really just does depend on your outlook, I suppose, on the markets or where it's where you potentially think it's trending, and sometimes clients again want to just really have that certainty of what their budgets are going to be. So everyone's different really in that respect, but I would say most of the time, or a lot of the time, people are doing that when they've found that property and they've had an offer accepted, because that's going to be that key sort of period when you don't want to be really seeing your property cost in pounds constantly fluctuating. That can become quite a stressful process, particularly if the markets start to move the opposite direction, and your cost is just increasing. So as I say, that's probably generally the time when people would be looking at that.
Fab. So you can basically speak to Smart. To our watchers, you can basically speak to Smart whenever you feel like it, and they will be able to monitor the market from you, so that you don't have to. So they would give you a ring to say, the pound's gone up. Are you interested? Shall we lock it in? Kind of thing. Is that right, Danny?
Yeah, that can certainly happen. We send out regular rate alerts as well, and there's been an improvement in the pound. So again, a lot of clients tend to jump on that. And potentially get their rate locked in at that stage. If the rate looks particularly attractive, clients do that, even if they're months out, that they might decide to do that. And yeah, again, if you've signed up with us early and you're speaking to your trader from early on, that's certainly an approach you can take. You can ask for a quick call when a rate hits a certain level, and then you can simply get it locked in. But of course, you want to have that all set up in advance so that you know exactly what the steps you've got to take to get that in place are, and the mechanics involved, which your trader will go into detail, a lot of detail with you about the mechanics involved with a forward contract, and what the things you need to know are, basically. And it's just a call to us to find all of that out.
When say if I was a client with Smart, would I say, or if you were my trader, would I always speak to you, or would it be a different person every time I ring?
So in almost, most of your dealings with Smart would be with your personal trader. There might be time potentially if you call in, post trade or something like that. If your trader's on another call, other members of the team are always available to help. We have, a large team of traders who can assist with, different, I suppose, concerns or queries or anything like that. But most of your dealings will go through your personal trader in that process, but there might be a time where you need something done urgently and someone else is always going to be on the phone to assist you. We're we value customer service very highly as a company. So that's our priority, is making sure any problems are dealt with quickly and efficiently. It's going to be a lot different to a bank or anything like that you might have dealt with in the past, where you're stuck on hold for an hour before you get through to a human. And that's something, we get a lot on our Trustpilot reviews, as people are always very grateful and thankful of the fact that they can just call and get through to a human straight away. When you're sending such a large amount of money overseas, there's really something you want, as a high level of customer service. You don't want to be sat on hold for an hour or sat twiddling your thumbs for an hour waiting for a response on kind of where your money is. So that's something we value highly here.
No, that's great. I know no one likes being on hold too long.
No one does, no.
Okay, I think we've got time for a couple more questions. I just spotted a good one. Christian asks, if I get a forward contract for, say, 200,000 euros, but find a property for less, say 170,000, what happens to the difference?
Yeah, another good question. So you kind of have a few different options there. And what happens quite often in that scenario is that if you have the funds to do so in sterling, you'd simply, transfer in the corresponding sterling amount. We would transfer out the 170,000 euros to your notaire if it's in France, the notary if it's in Spain, or the lawyer, whoever it's going to complete your house purchase. The remaining 30,000 euros can either be held on your Smart account until you sort of need them to go out, and then quite often we're sending that across to clients' personal accounts for spending money and whatnot, once they're already based out there or once they've got the property. So essentially, once those euros are purchased, they're yours to divvy out as and where you need them to go. So you can split up those payments, have, as I say, some sent to notaire, some sent to your personal account for spending money. If not, we can. There are options as well to potentially, if you've bought too many euros, we can cancel that. We can sell it back onto the market. And again, you'd have to discuss it with your trader as to the sort of the mechanics involved in that. But it is certainly something we can do.
Oh, and probably our last question that we've got time for. Don't worry if we haven't got around to yours; they will be forwarded to Smart, so they'll be in touch if we haven't answered your question. So Raymond asks, with a forward contract, when do you have to hand the money over to Smart?
Yeah, another really good question. So essentially, with a forward contract, it's once it's booked, and that's done verbally over the phone with your trader. You send, generally it's a 10% deposit up front of the total sterling amount, whatever the sterling amount comes out to be. So say if you're buying 200,000 euros, sterling amount is 170,000 pounds. You send over 17,000 pounds to lock in the rate up front. So that's 10%. You then set a value date on the contract. So that can be, as we said, any time up to 24 months. You might do that 3 months, you might do that 6 months. So we generally do that in line of your plan. So say if you were saying, right, I've got a trip in a month, I'm hoping to buy within 5 months, you'd set your value date for the forward contract 5 months out. That value date is the day by which you have to send the rest of the sterling. And again, with the deposit amount, we can be flexible on that often. So we can go to 5. It can be flexible in that sort of range. Generally, it's 5 to 10. But that's, again, something you speak to your trader about and just see what's going to be sort of viable for you and what's going to be best for you. And something, you would, again, be discussing that with your trader over the phone.
Fab. Thank you, Danny. Just give me 2 seconds. My laptop has frozen me out. Oh dear. I think that's about all we've got time for now today. Thanks so much, Danny, for all your expertise.
No worries.
Some useful bits in there.
Yeah, no problem. If anyone's got any questions, feel free to email them across to me. My email is danny.cook@smartcurrencyexchange.com. So I'll be happy to answer any questions that haven't been answered. I'll just say that again. It's just danny.cook@smartcurrencyexchange.com.
Yeah, if you can't remember that, don't worry. We'll be emailing you tomorrow with Danny's email anyway. If you did find this webinar useful, please feel free to leave us a TripAdvisor review. There should be a little button popped up somewhere on your screen. So yes, thanks again, Danny. Thanks for our watchers for tuning in, and good luck with your property purchase overseas.
Yeah, thank you.
Goodbye.